Every once in a while, I get an email in my inbox that really strikes a chord with me and piques my interest, primarily because it has something to do with our industry of non-bank lending or commercial real estate bridge loans. CoStar sent an email this morning with an article that was headed Short-Term Property Financing Surges at Non-Bank Lenders. For full disclosure, they're talking about a large institution or company. I think it was based out of Singapore that was raising capital to get into these non-bank type of loans. And what really struck a chord with me is the sentiment underneath this article that it was really pulling at. As we all know in the commercial real estate space for the last couple of years, it's been extend and pretend, survive till 25, and I'm sure something new will come up here in 25 that we can kind of kick that can down the road to 26. But the sentiment is real. We have a lot of loans that are on the books at traditional lending sources and banks that really just need to get paid off. We also have, as a result, some financial institutions maybe being more selective on what they want to originate and finance on the front end. Enter non-bank lenders like S&L Capital Group and some of the great commercial real estate bridge lenders here in California and nationwide. What does it mean for us? Volume has definitely increased on the number of loans that we're looking at. What we want to do is provide you with a bridge from point A to point B. It's really that basic. We're okay with underperforming assets. We're okay with distressed properties from a condition standpoint, rental income issues, so on and so forth. We're also okay with our box being that we can deal with some distressed property owners. Maybe the financials don't line up with a long-term loan. Maybe the global DCR doesn't quite meet what people are looking for out there in the more perm financing space. Enter a bridge lender or a short-term type of lender that can help your client get from point A, repositioning the asset or their financials, to then become more appealing for more permanent debt down the road. I think this is going to increase volume over the next few months and this year. As kind of a reference point, the article references January 2025 loan volume has already exceeded the entire quarter of 2024 for these non-bank lenders. I see it picking up. I see it staying busy. If you need somebody to take a look at that next bridge loan request, give us a call. We're here. We're ready. We have the capital available, and we'll be happy to take a look at your deal.